Opendoor CEO just get paid when we get paid as well. This is the best compensation package that every public CEO should have. And we will dive into that and how good this is for Open. Let's dive in.
Welcome to the game, I'm the wolf of Dubai.
So welcome to a brand new video. If you don't know who I am, my name is Danny and I'm looking for stocks that can go up 10x, 20x, 30x. This is not my first rodeo, okay? Opendoor will do great. My other companies that I post everyday videos on will do fantastic. It just needs time, guys, okay? I was in Tesla very early. I was one of the few YouTubers that talked about Tesla every single day. And with that, you know, the people bought even houses and apartments. So it's maybe time to follow me totally for free on all of my channels and on X. And also check out x10daytrading.com where we trade for you. This, for example, was the results last week when the market crashed, right? People make $100 per day, $1,000 per day, depending on your account size. If you start with $10,000, we would love you to be at around like $58,000 with being consistently positive every single week. Okay, doesn't matter if the market crash or is not good for trading or whatsoever. We want to have consistency. And with that said, let's dive into the video of Cass, our favorite CEO for Opendoor.
When you took the job at Opendoor, one, obviously all the retail shareholders were very excited because of your track record, what you did at Shopify, etc. To me, though, the most interesting thing was your pay package.
Yeah.
And the structure of it essentially is this exact same idea of I'm going to go bet on myself.
Yeah.
But I should be held accountable. If I don't produce value, then I shouldn't get paid. Talk a little bit as to, whatever you can in terms of like negotiating that, having that conversation with the board and thinking about it with your wife.
I mean, it wasn't much of a negotiation because what happens if you're a public company CEO, you get these consultants whose job it is to get you paid a lot of money without it looking like a lot of money. Like that's the job of these consultants is like, how do I get the executive paid a lot of money in the least offensive way? Mm-hmm. Which is what ends up essentially creating most public companies where executives get rich being really terrible at their jobs. Mm-hmm. That's like basically what happens in most public companies, which is why like great American public companies decline so rapidly. GE, like it's a real thing. It happens in the world, right? And I just didn't want that. Like I want my kids to be proud of their dad's career. I don't think I have 4 kids. I don't think they care how much money I make, but I think they care. My 6-year-old knows what Opendoor does and is incredibly proud. Mm-hmm. And I wanted that. So my conversation was, hey, look, I should get paid $0 and 0 cent unless it's actually not legally possible. So I get paid $1. I get paid $1 a year.
Why are you so greedy?
I know. It's actually, you know what the crazy thing is I learned? I have to pay for benefits. So I actually pay Opendoor money to work there, which I think is actually deeply appropriate. But I pay $1 unless I create value for shareholders. Mm-hmm. And if I create value for shareholders, then I get paid. And it's a generous package, but it's worth $0. Well, $1 if I don't create value.
Do you think every public company CEO should do this?
Yes, 100%. Yes. Yeah. It is. We have actually to maybe be more clear, for companies where the job of the CEO is important and not a pure manager. Mm-hmm. If you're a pure manager, and I'm not knocking pure managers, there are companies where
systems are in place.
Yeah, like a ham sandwich could run the company, right? That's famous. Like those companies should have good management packages.
Some of the companies do have ham sandwiches.
Yeah. But if a job is to create something that doesn't exist, then you want people who are optimized for that creation working, right? Rather than time spent. I think that generally it's like companies where executives can have private cars and like nice houses and private chefs and all these perks without creating any shareholder value are just so bad for capitalism. And capitalism is important. Like it's genuinely important. Look, Rockefeller never drew a salary. I don't think Carnegie did either. Actually, I know JP Morgan didn't. They got paid as shareholders and they created some of the most enduring companies in the history of the world. And that matters.
You know what's funny is I took inspiration from your structure, Elon's structure with our public company. And the part that stood out to me most was the reaction from the institutional investors. Yeah. They were incredibly enthusiastic about this idea of incentivize people to create value.
Yeah.
And it felt like it's novel.
Yeah.
But more importantly, it did feel like, okay, now you're on the same side of the table as them. And that is very rewarding, I think, for the people who are wagering capital, even if it's not their money, managed capital, whatever. They just want to feel like management is going to fight for them.
The only people who don't like it, the only people who do not like these packages are lawyers because they're very easy to negotiate. Because $1, you can't negotiate based on it. So lawyers get paid fewer dollars to to give you advice. And so lawyers are like, this is risky. And I'm like, what is the risk?
Yeah.
I understand I have a risk.
Yeah.
But like, what is the legal risk here? Like, I get paid nothing. I pay the company money unless I create value, and the shareholders are better off. And I think that's and by the way, almost our entire
you went a step further than this. I think this is the part that people don't realize. And the only reason I know is because I was told at some point that I wasn't allowed to do something. And I went and I looked for examples, and you were the only person I found. You get a $1 salary, but you also bought shares.
I bought shares, yeah.
Right. And so it is, in a weird way, I believe the only equity that you own, you bought in the market just like anybody else could, right?
Correct. 100%. And by the way, I think that's also important. I bought shares like everyone.
So as you can see, he says like, hey, I don't get paid when the value for the people in my company will be going up, okay? And I mean by those shareholders, right? So we are kind of aligned. So he bought stocks on the open market. He has a compensation package that only will be issued when he gets certain points, milestone, for example, the stock price, value for the shareholders, and so on. So he doesn't get paid when we don't get paid. And this is maybe one of the most amazing way to have a compensation. He gave the examples of GE or other companies that just paid tremendous amounts for the leadership, and the company just went slower and lower and lower. So I believe that's absolutely insane when we are seeing this kind of CEO. This is a forward-looking CEO. This is a CEO that is aligned with the shareholders, and this is how it should be, guys. You don't want to have like a CEO that gets like a huge pay package and is not aligned with the value of the company, right? Like, we both have the same goal now, to create shareholder value, because we put our hard-earned money into the company, and so everybody wants to benefit from it, and he will benefit a lot. And I believe that for him, it's also a huge legacy play. He came from a very good standing in Shopify, and then he left all of that to be the CEO of Opendoor, and can turn this thing around and be one of the greatest turnaround CEOs there was ever done. You remember when last time I talked about the turnaround, it was Intel. Intel was like $15. Now it's like $50, okay? Because a great CEO took over, and it was a great turnaround story. So very, very interesting, guys. Make sure to schedule a call with me on x10daytrading.com if you want us to trade for you beside your long-term investment. I always say like you should have like 80% in your long-term investing, 20% into a short-term trading, either by your own, you learn by yourself, or you come to a specialist like us. We do it for you. So check it out, schedule a call, 15 minutes, and we see if we can help you as well. Now, with that said, don't forget, the grass is greener always on the other side.